What's up guys, it's Dan from TPFX with a weekly Forex Outlook video. Today I'm going to be covering pound yen, pound dollar, euro New Zealand dollar and Australian dollar US dollar. Don't forget we've still got the sale live on our website, so if you want to take advantage of the course, one-on-one sessions, student chat room, detailed trade setups sent in real time, as well as much more, please jump on the website and join our mentorship program. The prices that are currently on our website will never be as low as they currently are ever again. That is a guarantee. You're also not going to find the mentorship program anywhere else that offers what we do for the price that we offer. Check out our reviews if you want to see what our current students think of us. But for now, let's jump straight into this outlook. So pound yen, I'm actually already in this trade. In the 4 hour, we had a double top form just here. We can see that the second push on this double top failed to give us any form of bullish orders. And it also appeared at a relatively key structure in the higher time frames, the day view and the week view. We can see the one level fib, so the first target has already been taken out on this trade, and I'm looking to see if we can get a push to this 1618, which takes us to this pool of liquidity that lays just below. At the bottom of this pool of liquidity in the day view, we've actually got the neckline of another double top, which, as we can see on our MACD, we failed to push up once again. So I'm interested to see if we can get a break of this 1371 level. If we can, that is actually going to carry us further down to 134 and 132. Obviously, we're looking to see a break of this trend as well. Nothing's really confirmed. We've only got 2 taps, so it's only just about visible. But if we can get this neckline taken out, this trend is going to be broken, and that could then open the much lower targets of this channel break that we've been looking at since back in September. Then obviously we're looking at open up the 129 and the 124 levels. So for me, I want to see the 1618 taken at 137. I then want to see the neckline of the day view double top taken out at 137. So as I say, I'm already in this trade from up here, which, as we've already looked at, was taken on the break and retest of the neckline of this double top just here. So pound dollar, in the higher time frames, we have got some very bearish price action forming at a major level. We can see this is a strong level, and the price this week with this pin bar appears to have rejected this level once more for the 5th time in a row. This could indicate a strong move to the downside, and if it does, we could be looking at some of the lows that we had seen back in April just down here. Now, in the lower time frames, we can see that confirmation for this trade is likely to come in the form of a break and retest of this range. Lower levels sitting around the 1.329, 1.328 kind of level, and if we can get a break of this level, ideally we're looking to open up the 1319 and the 1312 level. We've got this nice pool of liquidity, price action getting quite choppy, lots of wicks forming, lots of order hunting around this red box. So if we can get a break, hit the 1618 of the break of this range and get a pullback, that could indeed open up some of the lows that we'd seen earlier in the year. Confirmation for me on this trade is a break and retest of this lower range. This is a significant level in the lower time frames currently on this pair. Euro NZD had a great setup on this. We've had the higher time frame channel break, drop, smashed straight into the 1618 on this pair. We have got a weekly ascending trend line that the pair has just approached, could potentially have rejected. We failed to close below in the weekly time frame. In the 4 hour view, we can see we have got this descending channel. Now, if you've not watched our free video on how to use the MACD, I strongly advise you click our channel and you watch that video for how do I use the MACD, because this has the potential to be a prime example of how we want to be using it. We can see bumps on either side of our MACD. We've got manipulating price action to the downside, and we can see that our MACD is rapidly growing tired, not only across our histogram, but also across our MAs. Price action is showing us that the move to the downside is starting to weaken. We can see we're getting a lot of wicks form, a lot of smaller candles. So we are failing at the moment to actually push and get another impulsive move down. It's not going to invalidate this setup if we do get another wave lower. What I will want to see is that the MACD continues with the divergence, because that could just indicate an exhaustion sell-off that we're going to see in a push to the downside of this channel bottom, which could then give us a really nice and clean break, retest, before we then continue to move our way. At the moment, targets for this are going to be sat at 171 and 172, just about 173. However, these targets will change should we get another wave and another lower low form, because our fib's obviously going to need to be reapplied. That is likely to bring our targets down slightly. However, this would tie in nicely. As we can see, we've got all of these wicks formed, so we've got a nice pool of liquidity here if we do catch a break, to be able to gather some orders to carry these long positions up and swing this pair high. So confirmation on this is a break of the upper structure of this channel. Prices, it's very difficult to determine. If we open early in the week and we open with a punch up, we could be looking at breaking this current level being 1701. If we're not going to get a break until later in the week, potentially the week after that, then we're looking at a break of round about 169. So at the moment it's a little bit difficult to interpret where that break is going to come, but eyes for me will surely be planted on this upper structure. Orders has got the possibility to create a nice double top just here. At the moment, it's a little bit too early to determine whether that's the case, but we can see we have a clean rejection of this level here, and the pair has not rejected as of yet. We've not seen any strong upper wicks in the weekly time frame, but I will for sure be watching to see that we can get a break of the lower time frame structures that we're seeing in the 4-hour view. Just here, we've got a rising wedge in the 4-hour view, some clean taps, we've got some lovely wick form right at this key level, which is this weekly level that we've previously rejected. And then within this 4-hour wedge, we've actually got a 1-hour wedge. Targets for the 1-hour wedge. First target sits near enough smack bang on the bottom of the 4-hour wedge, and the 1618 sits just outside of that 4-hour wedge. So if we can get a break to the 1618 and then see our pullback, this could give us our entry on this 4-hour wedge, which has the potential to give us targets at 0.72 right on this liquidity grab here, and the 1618 sitting right on this previous level just here as well. So eyes for me to take a 1-hour trade after a weekend close. It really depends on how the market's open as to whether I still have interest in this structure. I'd like to see a few more waves, so I would ideally like to see the bottom of this rejected, a punch up, and then potentially a break, so that in the week view, when we get a close, we are going to have wicks form within this level again, confirming a rejection of this level. We then can look to swing this pair further to the downside and take advantage of a sell-off. So in effect, we can potentially take a trade based on an hour view piece of analysis, but we're actually going to have targets of a week view and a 4-hour trade. So 1-hour view stop loss with targets of a 4-hour, a day, and a week view trade. This has got the possibility of giving a very, very nice risk reward ratio trade. So eyes for me are going to be on this bottom level in the hour view, and then the 4-hour view bottom of the rising wedge just here. We can see on our MACD, we are seeing weakening across both of these patterns. So I for sure will be watching the bottom of these just to make sure we can take them out. But as I say, another wave is not a deal breaker. If anything, it is going to be a good thing. So watch the bottom of these structures, catch the break of these manipulations, and my plan is to sell them down. Ideally, the first targets are going to be 0.73 and 0.72, and if we can hit both those targets and confirm a break of the 4-hour, then that's going to open up 0.72 and 0.71. Now, I'm not going to give these videos every single week in the free group. There's a lot of people that are taking our content at the moment and taking advantage of the stuff that we give for free. If you don't follow us on Instagram, be sure to check it out. It's at @TP_effects. We give more value on our social media than most people give in a paid course. So if we're giving this kind of stuff for free, like the MACD video, we've got a few other free videos planned coming up as well. Imagine the type of content that we've got in our course. We've now helped a number of people go on and get themselves funded accounts to really up their trading game and really start to chase a better, brighter future for themselves. Get involved. If you want to learn, we are the place to be. There is no one else that can offer you a mentorship program like we do. Anyone else that is offering the one-on-one support like we do and has as clear and concise trading methods as we do is charging upwards of £12,000 per year. We are a fraction of that cost. If you want more videos like this, be sure to subscribe and drop us a like if you find it helpful. That's enough for this week. I wish everyone a very profitable week ahead.